Ladies and gentlemen, welcome back to the Capital Flows podcast. I want to do a quick market wrap session where I explain the developments that we've seen over the last week and break down for you how to think about the flows and the changes that we have seen as we are moving into FOMC next week. So the first thing is if you go to capitalflowsresearch.com, everything is laid out here on the Substack. You can put your email in here and get all of the recent changes and updates. And then on the main page, there's all the educational articles. And then here is the strategic positioning report that covers rates, curves, and currencies. This is really key if you're following along and impacted by interest rates. And especially, right now, everything is really leveraged to interest rates because of the Fed's policy mistake that they're currently making, and I'll explain that in a little bit. But go into this article, and what I want to really dig into is this idea, because this is going to frame the charts that I'm going to go over for the S&P, Bitcoin, and bonds when I flip over to TradingView. So here's a chart of the structural regime that we've really been in. Over the last 4 years, long-term interest rates across all major countries have risen to an elevated level. While there has been a reasonable degree of dispersion between long-end rates between countries, in other words, rates in Japan have moved a little bit higher on a relative basis to some other countries, it's clear that they're all at a higher level. And the fundamental question traders and businesses with interest rate risk are asking, which, basically if you're impacted by a currency or if you have a view on the dollar or anything like that, you're impacted by interest rates because the currency and interest rates are two sides of the same coin. They're not separate markets. The fundamental question is where we are going next. Are we going to remain in this range? Are we moving higher? Are we going to break lower? And that's what I really lay out in this report. So I'd encourage you to go through it. The main points that I'm covering are really focused on what is the structural regime that we're in, and are we going to break out, move down, or just continue in this range? And that answer is going to be really critical for what is going to take place as we move into FOMC next week. And then on the macro regime tracker, there is all of the tear sheets and then all of the explanations for updates that are taking place. So you have all the tear sheets that break down all the changes in equities, crypto, fixed income, FX. There are Excel spreadsheets on real estate and every macroeconomic data point as well. So those are the main things that you want to be tracking on the Substack. And I'm going to specifically be laying out additional research on Bitcoin and the S&P and some other things as we move into the weekend. But let me flip over to TradingView, and we are going to go over that a little bit more. Okay, so we have the chart of the S&P 500 here with the ES futures contract, and the changes that we have seen over the last 3 months frame what has happened this week and how it's going to connect to FOMC next week. So I've been laying out on the Substack for months and months now about the credit cycle that we are seeing. We continue to see confirmation of that view. I remain long ES and equities, ES, the Russell, and we continue to see more buying pressure that is pushing it to the upside with the S&P ending the week higher. Now, the NASDAQ has also pushed to a new high as well, with the Russell chopping a little bit more. But again, still we have a pretty decent momentum upward in the Russell, and there's continued buying pressure that is moving capital across the risk curve. So all positive signals in terms of the Russell, the NASDAQ, and they continue to confirm the view that I have laid out. With the VIX continues to move from 14 and is making lows almost every single day. We were at 18 a week or so ago, and we've moved down to 14, and that continues to confirm, when you have the VIX move down, it's an indication of liquidity in the system, right? When the VIX is moving down, that shows that on a macro basis and on a positioning basis that there is a surplus of money in the system. And so VIX continues to confirm that as well. And then when we look at bonds, and especially ZN. We're still in this range right here. We have ZT on the short end moving down to price less rate cuts by the Fed. The Z5 SOFR contract is ending the week a bit lower to price less cuts. And let me grab. There we go. We're ending the week on a bit lower with another red week in that contract, which is indicating what? Less rate cuts priced for 2025. So as that has been happening, that is continuing to also show the regime that we're in. Now, the interesting thing is that, the crude market hasn't really changed that much. We have basically a flat and to neutral range right here, and we're not seeing a breakout to the upside. So this compressing range, whichever way we begin to break, likely going to move in lockstep with bonds, because you'll notice that UB has been up just a little bit over the last couple days, and you can see that we've consolidated a little bit and we're compressing as we move into FOMC. It's really going to be FOMC that tells us where the next move in bonds is going to be, but my bias is that even if we do tick up a little bit, we're likely to continue rolling over. And again, bonds in Germany continue to test these levels down here. So I'm watching these levels really closely in the Buxel futures. So the final thing that I want to cover is the fact that we've seen gold down today from its highs, silver down today from its highs, copper down just marginally, not a ton. Vol is pretty elevated, implied vol is pretty elevated for copper right here. And then we also have this dynamic with Bitcoin. And I know everyone cares very deeply about Bitcoin, so I'm going to cover it a little bit more. You will notice that since I got long, I got long basically in this range right here, the 104 range, we're on sides. And I sent out a note explaining when we broke these levels that I was getting neutral, and just said if we make a close above 116, then I will get back long size. So we are back in that range, and the main idea is that we saw Bitcoin diverge from what? Equities. When we see the S&P 500 up on the day, and we see Bitcoin diverging from it, that's a pretty key signal, right? And let me put this right here, monthly chart. So notice you have the S&P continues to remain elevated, Bitcoin, some selling pressure against it. My view is that we're still skewed to the upside on a cyclical basis, but when you have a divergence like that, it's not hard to have Bitcoin retrace even down to 110,000. And, people are not going to like the idea that, you're actively managing risk and maybe changing your mind on a short-term time horizon, but to be clear, the credit cycle and those views that have been laid out, those remain. I still think Bitcoin is skewed to the upside, but it would not be surprising to see a little bit of retracement in terms of positioning or anything like that. There is so much focus on Bitcoin right now from a policy perspective, from a macro perspective, just everything. What I would say is broadly, Bitcoin is not going to offer the same type of returns as it did in the past, partially because there is so much focus on it. It is an asset that has, really become the forefront of focus in every major media platform, in every single talking platform for everyone. And while I still think it's a great asset from a, big picture perspective and a macro perspective, you have to recognize that these ranges are compressing. When you have more financialization of a product, then you have the ranges begin to compress and more mean reversion, as opposed to the types of trends that we saw in 2021 and 2022. There's a reason why this pattern here is very different than this pattern. You'll notice that, much wider ranges right here, and then much more tight ranges here, and then especially more recently, much tighter ranges right here, and then even so right here. All of those are what? An indication of the degree of financialization that is taking place in the Bitcoin market. So those are the main things. What I'm going to do is have an entire report on Bitcoin and also risk assets that I'm going to publish over the weekend. and it is going to explain these flows in depth so that you can have an idea of where we're going, what are the risks, what are the signals to watch for. I continue to be long equities and just broad risk assets. If I see warning signals of a positioning unwind, then I'll let you know about that and I'll publish an article for that. And then obviously all of the specific things ahead of time are for paid subscribers on the Substack. So if you go there, capitalflowsresearch.com, and you are a paid subscriber, then you will get all of the research and all of the breakdowns that are taking place, specifically the in-depth ones that are covering how things are developing. So with that, I hope you guys have a great weekend, and I'll see you guys soon.